Catalyst Law. My area of practice is in taxation, and that spans business, nonprofit law, and trusts and estates. I have with me my colleagues, Nate Funk, a business attorney, and he also works with real estate and IP matters. And then our newest addition to the team is Atha Mansoory, and he works also in business and real estate law. So they have put together for you a presentation to talk about the changes to the PPP loan program with the SBA, walk through the changes, the most recent changes, and answer any questions you may have. We can also touch on the EIDL loan. And so I encourage the attendees to log your questions in the Q&A. Has little talk images, and then once we're done with an initial introduction and overview, then we'll get into the nitty-gritty details. So with that, Nate, do you want to get started?
Yeah, excuse me, I can. Craig, is there anything you want to give us a little introduction?
Oh, and I forgot to introduce Craig. I'm sorry.
No worries.
Craig Hill with Beneficial State Bank. He's our banker and has been really generous with his time to join us and give you more of a perspective of the changing landscape from the banker's perspective. So many thanks to Craig for joining. We appreciate his time as always. So, yeah.
That's good for me.
All right. Well, yeah, thanks everyone for joining us. As Kimberly said, we're just going to kind of go through an overview of the PPP loan program and talk about some of the changes and of course, hopefully answer some of your questions. So I'm going to start by giving just a little overview of the program and I guess answer the question is, can I still apply? The answer, of course, is yes. The deadline was originally June 30th, but it was extended to August 8th. So you have a little while to apply still, and we certainly encourage anyone who is eligible to apply. You may know some of this already, so I'll kind of go through it quickly, but you're eligible to apply if you are a small business with less than 500 employees that existed on February 15th of this year. The definition of small business includes nonprofits, self-employed individuals, independent contractors, all sorts of business entities, corporations, partnerships, LLCs. So just about anyone's eligible to apply as long as you were in business as of February 15th and have less than 500 employees or 0 employees. Once you, I guess, figure out or confirm that you're eligible, the next step is trying to figure out your maximum loan amount. And that's, some of the calculations depend on what type of borrower you are. It's whether you're a small business, self-employed, independent contractor. But generally, you take your average payroll expenses over your average monthly payroll expenses times 2.5 and up to a maximum of, I think it's 100 million for small businesses. The only, I guess, exception to that is if you are a self-employed individual without any employees. Your maximum, I think, is $20,500 and some dollars or something. It's basically 8 50-seconds of $100,000, which is the maximum amount you can pay yourself as a self-employed individual. Otherwise, just completing and submitting the application, you will have to submit appropriate documents to show your business type, your number of employees if you have them, your payroll expenses, and everything you use to calculate that maximum loan amount. If your banker is as good as Craig, they'll help you through the process. But just getting all that stuff in order obviously will help on the front end to make sure you can maximize the amount that you're eligible for and not have too many problems getting through that process. And I think now Atha is going to talk a little about some of the changes that went into effect somewhat recently with the Paycheck Protection Program Flexibility Act.
Yeah, so I'm going to give a pretty high level overview of the changes that went into effect with the between the PPP and the PPP-FA, and just kind of go over them pretty quickly. And again, there's a Q&A. If you need to ask any more detailed questions, feel free to jump in there. The first thing to highlight is the extension of the quote unquote covered period, the period during which the funds that you spend from your loan are eligible for forgiveness. Originally, that period was an 8-week period that has been increased to a 24-week period from your loan disbursement date. There is a small caveat for that. So if you have your loan disbursement date from prior to June 5th, you can elect to use that 8 or 24-week period. If your loan is June 5th or later, the disbursement date, then you are using the 24-week period. The next big change is a reduced requirement for payroll costs. The original Paycheck Protection Program, Payroll Protection Program required a 75% of your fund proceeds or your loan proceeds be used for payroll costs. That requirement has been reduced to 60%. And they also clarified with the PPP-FA that if you do spend less than 60% on payroll costs from your loan proceeds, it's not a cliff. Rather, your forgivable amount will be reduced proportionally to reflect the amount you spent on the payroll costs. Another big change is the deadline to restore your full-time equivalent, basically your employee levels and your compensation rates for your employees. Originally was June 30th of this year, and now it is December 31st of this year. And what that means is essentially if you had to reduce your overall FTE or any cash compensation for your employees, you now have until December 31st to get those levels back to the let's say pandemic levels, but the pre-February 15th levels. There are also new exemptions or safe harbors for failure to rehire employees or maintain those FTE levels. So you can avoid a reduction in the forgiveness amount on your loan if the reduction in your FTE levels was due to a couple different things. So an inability to rehire your previous employees or employees that were with your company before February 15th, an inability to hire similarly qualified employees, or an inability to return to the same levels of business activity from pre-pandemic levels. A couple more changes. They extended the repayment timeline on the loans from 2 years to 5 years. So now loans made after June 5th of this year can take advantage of the 5-year repayment schedule. Something to note on that is that loans that were made prior to that date, that June 5th date, are still subject to the 2-year time repayment schedule. You can work with your lender to renegotiate that, but it's not an automatic extension. And the final big change for the PPP-FA is no limits on payroll tax deferrals. So the original legislation had limitations on that. Now you can defer half of your payroll taxes until December 31st of 2021 and the other half until December 31st of the following year. And I will let Nate jump back in on the next section for the use of funds.
So, all right, thanks. Before that, though, I did want to jump back and offer Craig an opportunity to step in if he has any insight or comments on the application process. Obviously, he's way more directly involved in that than we are as attorneys. So if he has any advice or guidance on that to offer.
Yeah, more structural, I guess, in the long run, right? If you haven't applied for a PPP loan, chances are you're eligible for one. If you were employed or were a self-employed person, like chances are you're eligible for some amount of a PPP loan. And working with your existing bank or finding a community bank or credit union in your neighborhood that can help you through this process. Just to state, we as a bank do about 250 loans a year traditionally for commercial loans, and we did about 1,500 PPP loans. So the volume is obviously enormous. There's a ton of interest, but over the past month, we've done about 70. So it's not to say that we are not doing them, we still are, and we're happy to continue doing them, but the volume's dropped off quite a bit. So that means your chances of getting one now, especially when it's not shouting fire in a crowded room of, oh, we're going to run out of money, like, please go get it now. There's plenty of money left in the pool. It shouldn't feel like a super rushed process, but the turnaround time will be pretty quick for the most part. I can't speak for every other bank, but I encourage you that banks should, there's been over $500 billion of this lending done, and just about every bank who participated has done hundreds of these loans, if not thousands. So the process should be very familiar for the bank to help people apply. They've got these questions a lot now, which was one of the biggest challenges when this program launched, is that banks weren't really familiar with how to execute or launch this program. Kind of second piece about that is I've heard a lot of concern from folks about being worried that they're going to show up on a list somewhere of having taken these loans, or that they're worried that their competition, other people are going to see, oh, are we struggling? Are we failing? Is that going to send the wrong message? It looks like I froze a bit, but is it sending the wrong message to take the loan? And I think the answer is no. It's not sending the wrong message in a lot of ways. You could, if you're under $150,000 for the loan, your name and company name will not be disclosed as having received a loan. And if it's over $150,000, it'll just say that you're somewhere between $150,000 and $2 million loan. So, and you can go check and see the types of companies and corporations that have got them. They range in all shapes and sizes. The kind of last piece I'd say about when you're thinking about applying for forgiveness is there's a system that you may have heard about, and maybe not, maybe just because I live in a bubble of the banking world of the past quarter. A system called E-Tran, which is how the loans were actually funded through the SBA. They were assigned an E-Tran number that was your slice of the $660 billion pool for PPP. Well, E-Tran is a system that was built in the 70s, and it doesn't, you have to use all capital letters, you have to do all sorts of other things, which made anything that if people tried to upload it in batches just fail, which caused a huge glut and issue in processing. Well, the SBA has said they're not going to be using E-Tran for processing forgiveness. They're building another system for banks to submit the information through for forgiveness that they haven't released to banks yet. So if you have a PPP loan and you haven't received, you want to hear about how to get it forgiven, you're now really wanting to work on that, the applications are available online, and you can go see those anytime. They're available to go check out the SBA website. Banks will be using those applications. Some will, like Beneficial State, will be using an electronic version of that form, but it will just be an electronic version of that exact same form. So you can take it and fill it out and get familiar with it and ask your banker some questions, ask your attorneys, ask your CPAs some various questions to help you grab the documentation you're likely going to need. But beyond that, don't sweat it. The first time you'd have to make a payment is 6 months from the date you received the loan is your first payment due date. And banks are expecting the forgiveness process to take a matter of days once they submit it with the SBA with this new program. And so if you received a loan in, say, end of April, that means your first payment's not due until the end of October, which means you just have to have it forgiven between now and then. So they should give you some comfort in that regard, that even if you received a loan on April 1st, the soonest you'd have a payment due would be October 1st, which means there's still several months to work on forgiveness and to not panic if you haven't heard anything from your bank yet.
Great.
Thank you, Craig. That's really helpful. I just wanted to jump in really quickly and say that we have gotten a couple of questions in the Q&A board. And so we will cover those when we get to a stopping point kind of at the end of the presentation and just dive into some of the more detailed questions and analysis that that are coming up. So please, yeah, continue to post your questions, and we'll get to that part of the program in a little bit.
All right. Next up is how to use your funds, or what you can use your funds for. Generally, you can use your funds on payroll costs, rent, utilities, and mortgage interest. Obviously, those are fairly vague terms, so we can dive into those a little bit. Before doing that, though, one I guess qualification is that, or limitation is that those expenses, the obligation to pay those expenses, had to be incurred before, at least for the rent, utilities, and mortgage interest. It had to be related to an obligation that was incurred before February 15th. So if you signed a new lease after February 15th, or new utilities or something, that would not be covered as far as a forgivable expense. Payroll costs is obviously the big one. So that covers the things you would expect it to cover: salary, wages, commissions, tips, bonuses, hazard pay. The limitation on that is that it's capped at an annualized salary of $100,000 for any employee, any given employee. So it depends on whether you're using the 8-week cover period or 24-week cover period. Of course, don't have those numbers in front of me right now, and I forget what they are, but you'd be limited to pay any given employee, an annualized basis of $100,000. In addition to those kind of cash compensation items, there's also, non-cash compensation like employee benefits, costs for vacation, parental, family, or medical leave, or sick leave, what they call allowance for separation and dismissal, which is, I guess, a payment you make to someone who's been terminated or is leaving for some other reason. Health insurance contributions, contributions to employer contributions to retirement accounts, but not the employee side of those, if any. State and local taxes assessed on compensation. And there are, again, some limits on, so those are kind of generally the definitions, but some different limitations or requirements apply to self-employed individuals. So again, as I mentioned earlier, they're limited to a cap of an annualized cap of $100,000 or 8/52 of their 2019 net earnings. In addition to the wage or the payroll costs, then there's also the non-payroll expenses, which includes rent, and that can be for office space or real property. It can also be for personal property that's used in the business. It also includes utilities, which are kind of the standard utilities we all consider and pay, and then mortgage interest, which obviously is not the mortgage payment, but just the interest portion of that payment you can use, and that portion can be forgiven. Some limits on those, I guess, also include, in addition to the $100,000 cap or the annualized salary of $100,000 cap, is you cannot use it to pay independent contractors, and you can't use it to pay owners in a corporation, whether it's an S Corp or C Corp, if they are not also on payroll. So shareholders who aren't on payroll, you can't pay distributions to them and count that as payroll. Let's see, I think that was all those. There's a lot of them. And then, so once you figure out what you can use it for or what you want to use it for, I think as Adam mentioned earlier, previously the requirement was that you had to spend at least 75% of it on payroll costs. That's dropped down to 60%, which is helpful. And again, that's not a cliff or anything. It just means if you don't spend at least 60% on payroll, your forgiveness will be reduced proportionately to bring you back down to whatever that balance needs to be. There also is, for determining, I guess, forgiveness or calculating forgiveness, what they call the alternative payroll covered period. So when looking at, so obviously there's the acceptable uses of the expenses, but then there's also when you pay those expenses or when you incur that obligation. And there was some confusion in the original act, but the SBA came out and clarified that it's either paid or incurred during your covered period, which again, depending on when you received your loan, is either 8 or 24 weeks. And you can pay any of those expenses as long as they were either incurred or paid during that period. And for anything that was incurred during that period but not paid until after, it just has to be paid before the next regular either payroll for payroll costs or billing cycle for utilities, rent, and mortgage interest. So, but for the alternative payroll covered period, it gives employers, if you have a bi-weekly payroll period, it gives you the option to, instead of starting your 8-week or 24-week covered period on the date when your loan is dispersed, you can start it on the first payroll date after you get your loan or after your loan is dispersed, and then count either 8 weeks or 24 weeks from that. That kind of gives you some flexibility as to when you use those funds and pay those funds, so it's not really penalizing anyone that has a different payroll cycle or an odd payroll cycle. You just need to be careful, obviously, that you use that consistently and that you make sure you report it accurately on your forgiveness application. Also important to note that that's only for payroll expenses. That doesn't apply to rent, utilities, and other things. Otherwise, as far as limitations on uses or other limitations or other restrictions, there's some, they're not really restrictions, I guess, but there's some limitations on forgiveness depending on what your FTE or full-time equivalency was as when on the date, I think either on the date you applied or as of February 15th. I think as Adam mentioned, you have to keep those or maintain those levels, that level of FTE, and you can't reduce the salary of any given employee who has an annualized salary of less than $100,000. But there is a safe harbor that if you restore those by December 31st, you can, you're not penalized. So your reduction, or you won't receive any reduction in your forgiveness amount. I'm going to open it up, I guess, if Craig or Atha have any comments on those uses of the funds. There's kind of a lot of details in there, so it's possible I skipped over some.
Yeah, just functionally from a bank perspective, we've seen a lot of folks want to move their period around for making it most advantageous, but it was a lot more impactful when it was only 8 weeks than versus the 24. I've seen a general question of like, well, if it's now 24 weeks, can I pay myself like 24 50 seconds of my pay instead of 8 50 seconds of my pay? And it's no, functionally, it's still limiting how much you can pay each employee based off of the idea of 2 months basically of their compensation or 8 weeks. So even if you spread it out further, it's still limiting it per FTE employee that you could keep compensated through that regard. But for some folks with 8 weeks, if you got a loan on Monday and your payroll isn't until next Thursday, and the previous Thursday had been that 8 week period would really circumscribe a lot of the payroll that you could have included in your costs, which was really brutal. At 24 weeks, we don't anticipate that being quite as much of an issue. A lot of what we see with the 24-week period is people still just paying 2 months of salary for people who are continuously employed, and then using the rest of that time to continue to make rent payments and other pieces so that the fund lasts you a bit longer, but that you're able to pay your people now, spend that chunk now, and then give yourself up to 5 months or so of being able to pay your rent or mortgage interest.
Yeah, it seems that the extension from 8 weeks to 24 weeks has been a big help, especially for businesses and employers in the restaurant and food industry or other industries, other business areas that have been hard hit by the pandemic. I know several clients we've worked with have been wondering even if they should take a loan that was offered because they weren't sure if they could even use it within that original 8 week period. The extension to 24 certainly helps. There's still a lot of uncertainty about when or whether things are going to open up or they can use those funds, but it certainly makes it a lot easier, as does reducing that requirement using the funds on payroll from 75 down to 60% gives a lot more flexibility to use some of those funds for rent, utilities, and other things. Once you got all that mastered and figure out how to spend all the money, the next thing, I guess, is to figure out how to get forgiveness. There are 2 different applications now for forgiveness. There's the original PPP loan forgiveness application, and then the SBA came out with I think what they call an EZ loan forgiveness application. So if there's and they are pretty specific about the requirements for eligibility to use the EZ application. It's if you are self-employed, an independent contractor or sole proprietor and did not have any employees when you applied for the PPP loan and did not include then obviously any employee salaries in your calculation of average monthly payroll costs. That's one option. If you satisfy that, you can use it. Otherwise, if you have not, if you're any small business or any borrower, but have not reduced the compensation of any of your employees or your FTE during any of the period, any of your covered period, you can also, you also qualify for using that. And I should say, not that you haven't reduced them, but you haven't reduced the salary of any employee who earned an annualized salary of less than $100,000 by more than 25%. So you actually can reduce the salary of those people by some amount, but just not by 25% or more. And then you can't reduce any of your FTE. So the average, they call it the average paid hours. So if you qualify for that, you can also use the easy application. Otherwise, if you, again, have not reduced the compensation of any of those specific employees and are unable to return to your previous business levels, so you have qualified for one of the safe harbors as far as why you have possibly reduced your FTE. And I think they lay out some specific options or requirements, I guess, that you must meet for being unable to return to those business levels. But basically, you're just, because of whether it's state or federal or other guidance or requirements that have been issued, you simply can't open your business or operate at the level you were operating at between, I think it's January 1st and March 31st. As the same level before February 15th. So if there's OHA, OHA or CDC or whatever it might be guidance that limits your ability to operate your business, again, the restaurant or food industry is a common example. You may be able to use that easy application. Everyone else though has to use the regular application, like I said, Greg obviously has much more experience and knowledge about these areas than we do, so I'm going to give him an opportunity to talk about those applications.
Yeah, they're functionally the good advice that was, or what I call sound advice that was given by attorneys, by CPAs, and by bankers throughout this whole process is whatever you spend the money on, just document what you did, and try to create a good paper trail for yourself. And try to do so as you spend it, so that you don't have arrears rushing. I hate doing expense reports, and so I try to keep them current as much as possible, because going back and trying to reconcile something from 3 months ago when you're missing a receipt is the worst. So what we try to do with folks is to suggest, wherever possible, pull your payroll reports for those periods as you pay people, and then sock them in a folder somewhere on your desktop. Same thing with if you're paying healthcare costs or retirement benefits, and remember those are employer costs, not employee paid costs. Sock those away and keep good records of those things, which you had to provide them to be able to get the loan in the first place. You're just going to need to provide the same things again when you're going for forgiveness. So it should feel relatively familiar in terms of what you provided. You'll also see a request from a lot of places for your 940 or 941 forms as an employer, related to for tax reasons and for payroll pieces. Those are important. It may delay your ability to apply for forgiveness until after that quarterly report has been completed, just from the perspective that they're looking to make sure that those numbers match up and look congruent with one another. Some banks maybe ask for a little bit less, but functionally they are requested on the forgiveness forms. And while every bank may look slightly different from a forgiveness perspective, functionally think of it like TurboTax or QuickBooks. Like, however you're paying your taxes, you're still having to provide the same information to the IRS that substantiates your tax return, right? That substantiates what you've done. So think of it the same way with your forgiveness application, is that how did you come up with these numbers? How are you proving that you spent at least 60% on payroll and that the other 40% was not any excluded category? It needs to be rent, it needs to be mortgage interest, it needs to be utilities. And utilities is relatively broad. There's things that you pay on a monthly basis. Like if you rent a printer, that's something that counts as a utility that we've seen before. And a lot of office spaces do rent larger printers that could cost several $100s, thousands of dollars a month. That's a helpful thing to know that you can still spend them on. But basically you can't go decide to pay, I have spent 70% of this loan on payroll, and I'm going to go spend the other 30% paying down principal on a building that I own or something. It doesn't work like that. So just knowing that the spirit of the program is to try to keep people employed rather than being on unemployment. One more that we've seen from folks, and if you're in this category, congratulations, it seems like a bit of a champagne problem, but if you're somebody have an employee making $300,000 a year, you can reduce their salary more than 25%. You could reduce it very drastically. They're basically excluded from a lot of the calculations beyond the FTE because they're capped at $100,000 for your PPP loan application. And we've seen some companies make those decisions to reduce higher paid employees substantially as an equity piece of like, well, you're getting to keep your job on this side, but we're only going to pay you what you were max eligible amount for PPP. And you can reduce those as far as you want. It doesn't lower your forgiveness, which is helpful to know, especially if you're a company with a few higher paid employees and a lot of lower, under 100,000 in paid employees. It's just important to remember, especially as you're doing your pro rata for weeks.
Great. And also want to mention, as far as timing on when you can apply or should apply, I suppose, my understanding is that you can apply as soon as you use up all your funds. Obviously, there's might be good reason to wait until a little later, one, to see if the SBA comes out with additional guidance that helps on some of these issues that are still a little unclear or you're uncertain about. Two, obviously, you need to wait, like Craig said, to make sure you have all your documentation in order and ready to go. One other issue is that if you have reduced the cash compensation of any employee earning an annualized salary of $100,000 or less, or you reduce that overall full-time equivalency, the FTE, you will want to wait to submit your application until you restore those levels. You have until December 31st to restore those, but you'll want to wait till you have an opportunity to restore those. Otherwise, if you submit your application before that, you'll forfeit your opportunity or right to restore those, and then you'll end up getting your overall forgiveness amount reduced accordingly. So need to be careful about some of those things. But otherwise, once you use up all your funds, even if it's before the end of your covered period, I think you can move forward with that forgiveness application. But again, given how often the SBA comes out with additional guidance and seems to change things, it may be beneficial to wait and just kind of see how things shake out. As far as once you submit, I guess, your application and your amount, a certain amount, hopefully 100% is forgiven. I know some clients have been asking questions about the review by the SBA or even an audit. The SBA did come out and clarify that only loans of $2 million and over will be, all those loans will be automatically audited and reviewed. For loans under that amount, I think they said they'll do what's called a spot check, which kind of hard to know exactly what that means. But I think as long as you have your documentation in order and there aren't any really big red flags on there as far as either not substantiating some amount or some expense, or having other issues, you should be relatively confident that nobody will be poking around your application, or if they do, that everything will be in order. And then again, any amount that's either unused during that 8-week or 24-week covered period, or just any amount that's not forgiven for whatever reason, has to be repaid. All the loans are 1% interest. Your repayment timeline will be either 2 years or 5 years. If your loan was dispersed before June 5th, it'll be 2 years unless you contact your lender and they agree to extend that out. For any loans dispersed after June 5th, by default, the repayment timeline is 5 years. And I think either Craig or Adam mentioned earlier, there's an automatic deferral for all payments for 6 months. So obviously repayment period doesn't start for a little while either way, but those amounts will be repaid over either a 2 or 5 year period.
Yep, and it's helpful if you, a beneficial state, the way we've been told by the SBA is that if somebody approaches us about wanting to extend their period from any unforgiven amount from the 2-year agreed amount to a 5-year amount, we are required to do so if we're accepting government money for liquidity pools, which almost every single bank is accepting that money to make more PPP loans. But it doesn't just happen automatically, and you do have to hold up your end of the bargain, which would be signing some change in term loan documents that acknowledge the maturity date changing, as well as the amortization. If you're going to have an amount of money that isn't forgiven, the one thing you have to think about is it may be good to go back to your bank anyway and ask for the longer amortization because it's at 1%. It's a very low rate. And it'll also then document how much was unforgiven in an actual loan document and then give you the amortization at that time. So if you do think you're going to have an amount that isn't forgiven, I think this is one helpful headspace to really think about is, while of course it's better to have forgiven money than money you have to pay back, 1% debt with no personal guarantee that has a 5-year amortization to repay is exceedingly cheap money. It's cheaper than you will ever find anywhere in the private market anywhere. I mean, you aren't going to find it again. So we're seeing a lot of restaurants and other folks making the decision that they're just going to keep the money and use it as a loan and use 30% on the payroll that they could use for pivoting to be a takeaway function, and keeping 70% as a year with a 5-year amortization, fully amortizing loan at 1%. Obviously not encouraging people to not pursue the money that's eligible for forgiveness. But I think it's important to remember, is it better to stay in business and use this cheap money that you're going to have a hard time finding from banks again anytime soon, at least not even anywhere near this rate, with no personal guarantee? Or is it better to have it be forgiven? And nobody could make that judgment call but you and your business. But I think it's important to remember that having an amount that isn't forgiven, but that you could use the funds on what you really need to be able to use it on, is not the end of the world.
Craig, just quickly, like the first part of that broke up a little bit. So I was curious how willing banks are to go with the 5-year for loans that were before the cutoff date, the June 5th date. It sounded like very willing. And then the second part, are you proactively, advertising that to lenders that are eligible for that extended period? Or is it more of like, you got to ask for us to tell?
Yeah, with 1,500 loans that we made out of this side, it's basically, if you want it, you got to let us know. But we are not anticipate doing it until after forgiveness is over, and then doing a warrant of like, hey, if you are looking that this isn't going to be forgiven, we don't want a bunch of people changing their loan term to 5 years and then having it all forgiven anyway. It just creates a lot of documentation for everybody. And if you're going to end up with, $200 left and you want a 5-year amortization or something, I would rather do that after your forgiveness application is over, so that we know that that's what it is. And maybe you'll make the decision of having to print off documents and return them all is actually more hassle than it's worth. Because loan documents, it basically doesn't really matter where you get anywhere. They basically have to be wet ink signed a lot of the time. So it's just, yeah. So, but yeah, we're trying to proactively tell people who would be eligible for it, but we can't really do that until after forgiveness is over. But there is basically a compelling government piece here that if banks are taking liquidity from a treasury pool that's set up for banks to make as many PPP loans as possible versus their balance sheet, that they're supposed to basically accommodate customers seeking a 5-year period instead of a 2-year period.
Great. A few other issues we want to touch on. One is I guess the tax aspects or consequences of receiving and using a PPP loan. So the SBA has made it clear that the PPP loan proceeds you receive will not be considered income. You don't have to report them as income on your taxes. But at the same time, you cannot then deduct from your taxes the expenses you paid with those PPP funds. So kind of a one good and one bad for that. Although there have been some discussions, I think, in changing that part to allow people to deduct those expenses, because I think otherwise some businesses might end up with some surprising tax bills at the end of the year because now they have a certain amount of expenses that they otherwise would have been able to deduct, but now can't. So certainly overall a net benefit if you get the PPP loan to use those funds for those expenses, but I think also to keep in mind that there may be a slightly larger tax bill at the end of 2020 than you might have expected. In addition to that, there is an interplay between the PPP loans and some of the other disaster relief programs. For example, the economic injury disaster loans, or the EIDL. You can apply for both. I guess the only limitation or the big limitation is you can't use both other loans for the same things. So obviously there's a lot more restrictions around the PPP loan. For you have to use it for payroll and rent, utilities, mortgage, interest. So if you also have an EIDL loan, you can't use that loan for those same expenses. So you just have to be a little careful on kind of how you segregate those funds and how you document what you're using them for. But you can apply for, and many businesses do apply for and get both. Also, there's the payroll tax deferral program that Atha mentioned at the outset. Previously, I think any PPP recipient could only take advantage of that program until the point when they applied for and received notice from their lender about their forgiveness. But the PPP-FA changed that, and now you're free to take advantage of that payroll tax deferral program just like any other business would. And I guess to the extent anybody's unfamiliar with that, it allows you to defer payroll taxes, the employer side of the payroll taxes for, I think it's for the entire year, and then 50% of the amount is due at the end of this year, so 12/31. The remaining 50% is due at the end of next year, 12/31 of 21. I might be wrong on those dates, so I'd have to check. But it allows you to defer those payroll tax expenses for a while. And obviously have to be repaid, so it's not waiving them or getting rid of them, but you can at least defer them. And I think with that, unless anyone else has any comments or questions, we can open it up to questions from everyone else.
Thanks, Nate. That's great. So we have, I'm going to try and group any questions that are duplicative, but forgive me if I miss some. So we might cover the same thing a few times. The first question is, I own and operate a C corporation. However, I'm the only employee of the company. Does my salary in paying myself fall under the guidelines of the PPP loan forgiveness?
So for a C corporation, it would depend on whether you're paid, whether the payments you receive or the payment, how you pay yourself is as an employee, if you're on payroll, or if the only payments you receive or are paid are through distributions to you as a stockholder. If you are on payroll and are paying yourself as an employee of the company, even if you're the only one, you could use those, whatever that number is, as the basis of your calculation for the loan. But if you're paying yourself only in distributions as a shareholder, you wouldn't be able to use the funds for, that wouldn't be considered a payroll cost. So you wouldn't be able to use the funds for that, and obviously wouldn't be able to get forgiveness for that. So it'd be pretty limited.
And not just are paying yourself, but paid past tense yourself.
True, exactly.
For the period that is you use for the calculation. So I've seen a lot of folks who adjusted their payment, or they've started a new business in February or something, and it's just bad timing. And they're like, well, I've been paying myself that for the past several months. It's like, it's still on an annualized basis or from the date of inception of the company. So you can talk to your bank about it and you might still be eligible. But again, you have to be paying yourself wages, wage-based income, not just the shareholder distribution.
Right, that's an excellent point. And also you can be paying yourself both. You could pay yourself as an employee. Let's say you're paying yourself an annual salary of $50,000 as an employee, and then any excess net that the company earns beyond that would be distributed to you as a shareholder. So you could get a loan based on that $50,000. Obviously, the average monthly payroll, whatever that calculation turned out to be, but not the amount you pay yourself as a distribution. So as long as you paid yourself at least some amount in 2019, or depending on what period you had to use when you're operating, you'd be able to utilize that payroll number for the loan.
Great, thanks. So Craig, you just touched on this, but the next question is, what if you're a new LLC business that started in the end of 2019 and had little or no income until 2020? Can you still apply for the PPP loan?
We've done it. I think there's a lot of discretion that's being given to banks. I guess you call it grace because of how little guidance there's been. But we're still having people then, you have to have demonstrated the start date of your company as having been more recent than 12 months, and that you're using a year-to-date calculation if you haven't received a loan yet. So we're doing it until July 14th or something on that side. And then it's still going to be based on an average monthly payroll. So if you had 3 months at zero and then 4 months at $50,000 total over those 4 months, you're going to have to take a weighted average and then find out what that would be over the course, since if there isn't a 12-month period to calculate on.
Yeah, that makes sense. This looks like Craig is.
So yeah, I can jump in.
And a period from the date I cut out.
Yeah.
Okay.
So it is a little odd because the requirement is that you have to be in business as of February 15th to be eligible, but then it says you have to use your tax information or payroll information from 2019. So there is kind of that gap, and it's a little in one of the I think interim final rules that the SBA issued, or maybe in the FAQs, they said they would issue some additional guidance for businesses that existed as of February 15th, but weren't in business in 2019. But they, as far as I know, haven't done that yet. So that's not super helpful. But there is some guidance about if you were in operation between February 15th, 2019 and June 30th, 2019, you have to use your payroll data from either the entire calendar month of 2019 or the 12-month period that preceded your application date. If you were not in operation during that time, so whether it started sometime late in 2019 or even right early in 2020, you can use the payroll data from January 1st, 2020 to February 29th, 2020. There's kind of some flexibility there, but it's still a little unclear about, if you weren't in business for the entire year of 2019, how to calculate that. Like Craig said, I think if you're in business for a certain number of months, even if you weren't earning any income or revenue, then you still have to use or count those months as far as calculating the average monthly payrolls.
Great, thank you. And then another related question. I am self-employed with an LLC that is taxed as an S Corp. Can 100% of the loan be used to cover my wages as an employee owner? The total does not exceed the $20,000 maximum. So asking, I think, perhaps the question is less about the amount of the loan, but can the 100% of the loan be used to cover wages? And that would be it would have to fall under that $100,000 limit for annualized salary.
Mm-hmm.
Yep. So just make sure you multiply that by 850 seconds or whatever, right? For times 100,000. So if that's what 15,940 or whatever it is, 15,494 or whatever the number is, for that piece, we have seen a lot of sole proprietors do that, where they're taking their wage income for 2019 that they paid themselves that way at S Corp, at functioning as an LLC, you name it, and then just
I can jump in.
They're just paying themselves that over a 2-month period, and it's that no rent, no utilities, nothing else.
Okay. Yep.
Similar to, I think, that first question is as far as the C corporation. It's an LLC, but if it's taxed as an S corporation and you are on payroll as an employee, then I think as far as the application for forgiveness is concerned, or the use of the funds is concerned, you're considered an employee. So as long as you're using those funds to pay yourself wages, as opposed to a distribution as a shareholder or a payment as a member of the LLC, you can use that to pay your own salary, subject to that limitation, the annualized cap, or the cap of an annualized salary of $100,000.
Okay, great. So I'm going into the chat. We have some questions there. This one says, I am a sole proprietor with no employees who got the loan after the June new rules date. Does this mean I can spend 60% of what I received over a total of 24 weeks on paying myself and use the remaining 40% on rent? That's the first part of the question.
Yes, subject to the limitation that as a sole proprietor, you are limited to paying yourself 850 seconds of your 2019 income from self-employment that was reported on your Schedule C. That would have been the same number used, I think, to get your maximum loan amount. So it should work out that you would fall, if you use 60% to pay yourself, I think the math would work out. But just keep that in mind, that you're limited as a self-employed individual. You're limited more than a kind of general small business, in that you can only pay yourself a maximum of 850 seconds of your 2019 income, even if 2020, so far, or, if you started in 2019, had a very low income, it doesn't matter if 2020 is much better, or you could have paid yourself more now, you're still limited to that, whatever it would have been, 8/52 of 2019 income. But again, at 60%, if you use to pay yourself, the rest 40% for rent, utilities, and other things, it should work out fine.
Okay. And then the second part of the question is, I'm going to try and interpret it a little bit, but does the sole proprietor need to rehire? So does the sole proprietor need to rehire themselves or someone else at the same weekly salary amount or compensation amount as before February 15th to get full forgiveness? So I'm assuming that means that the sole proprietor is getting paid with PPP funds and then not getting paid. And the question is, I guess the follow-up question is, I don't have to fully pay myself the same as before for the full 24 weeks after the PPP was given. So I think there's some confusion around the timing of when the money is dispersed versus and the employment requirement to have when you apply for forgiveness.
Yeah, and I think it is a little unclear I think as a sole proprietor, I think, like you said, whether you have to rehire yourself. I mean, if you're a sole proprietor, meaning you don't have any type of business entity, whether it's an LLC, a corporation, if you're just a sole proprietor, then you really can't rehire yourself because there's no way to do that. So as long as you use those funds to pay yourself, my understanding is that whatever you receive in that loan will be kind of considered paid over that either 8-week or 24-week period. So as long as you use those funds, again, for payroll, at least 60% for payroll costs, and then the remaining 40% either for payroll also or for rent, utilities, and mortgage interest, you should be fine as far as applying for full forgiveness. I suppose if you hired another employee, even if you didn't have one before, and used the money to pay them in payroll, you wouldn't be penalized for that in any way. You'd be, even if I suppose you didn't pay yourself, you would still have one employee the same you had as before. So I don't think there'd be any issue there. I hope that answered your question.
Yeah, thank you, Nate. So here's another question for a single member LLC. And I think maybe this question applies to, let's compare a single member LLC to a sole proprietor to an independent contractor. Are you limited to 8/52 of your 2019 line 31 on Schedule C, regardless of whether you do the 8 or 24-week forgiveness option? So for an S Corp, so we've got single member LLC, an S Corp LLC, sole proprietor, and independent contractor to kind of compare how the calculation would it,
right.
Yeah you can
so,
see that. So
yeah so I think if I understand right, so if you're a single member LLC, you'd be considered a sole proprietor from the IRS's perspective or for tax purposes, and also then for the purposes of the loan and forgiveness. So the single member LLC is the equivalent of a sole proprietor, unless it's taxed as, you make the election to be taxed as an S Corp. So it would kind of fall within, that bucket of the sole proprietor, and you'd be limited to that 8/52, unfortunately, as you mentioned, whether or not you use the 8-week period or the 24-week period, you're still limited to a maximum amount to pay yourself as payroll costs of 8/52 of your 2019 line 31 from your Schedule C. Obviously, you can use the remaining portion for rent, utilities, and other things, but you can't exceed whatever that amount would be, and also subject to that cap of annualized salary of $100,000. So if your income on your Schedule C from 2019 was $200,000, 8/52, you wouldn't be allowed to use 8/52 of that. I guess it'd be, the equivalent of 4/52 of it, because it'd be half, because you can't pay yourself more than an annualized equivalent of $100,000 over that period either. And so that applies to self-employed, independent contractors, if anybody who didn't have any employees, so self-employed, independent contractors, or a single member LLC that's not taxed as an S Corp. Otherwise, any business that had employees or was taxed as an S Corp or a C Corp, it would be a different calculation, because you'd be considered, assuming you paid yourself as an employee rather than a distribution to yourself as a shareholder or a member of the company.
Great, thank you. Okay, so we have another question. It says, I applied for PPP before filing my 2019 tax return. I provided a Schedule C draft as an independent contractor and got the PPP funds. But when I filed my taxes recently, my net profit had changed. Should I return the whole amount of funds now or just do the repayment?
Good question. I think it would depend on why it changed and how much, like by how much it changed. So I assume the issue would be if it changed, if it's now lower. So you received a loan that was more than your actual tax filing would indicate you are eligible for. So yeah, it would depend on how it changed, why it changed, if there was, whether it was just, whether it was mistake or something, some other documentation or something you found or realized or something changed. I think one, as long as you've used the draft that you had and it was prepared in good faith and based on your best understanding of the information that was available, I think you can somewhat confidently use that. But at the same time, if you received a higher loan than your actual tax filing would indicate you are eligible for, then it's too bad. I think we lost Craig, because this would be a great one for him, but I might recommend contacting your bank to see if you should either return that portion, whatever that is, or just don't use that portion and pay it back at the end. I think as long as you, kind of with the overall program and the application and things in general, as long as the certifications and the statements you make are made in good faith, the penalty is only that you may have to repay the amount that you take out of the loan. If it might not be forgiven, and then you just have to repay it. But as long as you didn't intentionally use the wrong numbers or otherwise make a statement not in good faith, I don't believe there are any penalties as far as monetary or other penalties. So you just have to repay that amount. So I guess at a minimum, I would reserve that amount, whatever it is, and either see if your bank will just take it back, or if you can somehow return it, or just don't use it for expenses and repay that amount once you apply for forgiveness. Yeah.
I think you're echoing some of Craig's advice on previous webinars. So yeah. That's great. So another question about forgiveness. Do we have to have similar numbers of employees prior to March 2020? And can we use the combination of, I think, full-time and part-time to reach the similar number of employees? And can we count various pay periods like April to June, and if they leave, other payments for the other part of the pay period? So I think breaking that question up into three parts. Do you have to have a similar number of employees prior to March 2020 and at the end of your forgiveness period?
Yeah, great question. And some of the FTE and the employee, the FTE reduction questions can get confusing and complicated. So I'm actually going to see if I can find here. I know the SBA gave some guidance on how to calculate FTE. And so I think, I guess on a basic level, you don't have to have, like if you had 3 full-time employees and 2 part-time employees kind of as your base, you don't have to have 3 full-time and 2 part-time whenever, in the future when you compare it. You just have to have the equivalent, the same FTE. So you can get there by hiring 4 full-time if the 2 part-time were 0.5. You could have 6, I guess if there were 3 full-time, you could have 6 more part-time and, so 8 total part-time. Whatever it works out to be, it just has to be the same average FTE. And I was going to look here, but of course it's never easy to find what I'm looking for when I need it. But they give you some I think it's in the instructions to the forgiveness application. They kind of go through how to calculate that FTE, and you use your base period. I think you have an election, so either from February 15th to June 30th or January 1st to February 29th, you can use that as your base. So whatever your FTE, you combine all your FTE together for that period and then compare it to your period when you apply for forgiveness. And again, even if that goes down at some point, as long as you restore that either before you apply for forgiveness or before you have until December 31st, you won't be penalized in any way. So, and they give you a couple options for calculating FTE. You take an employee, and as long as they work an average of 40 hours or more, you use 1.0. Even if they work more than 40 hours, you're maxed out at 1.0. And then you do the same thing for any part-time employee. You take their average hours over that period, whatever period you use, and find their average FTE, and you can use whatever that actual percentage is. So if it's 0.5 or 0.3, you can use that. Or as a simplified method, you can use 0.5 for every part-time employee. So that might be to the benefit of some people who have a number of part-time employees who work less than that amount. But I guess to be clear though, you have to use the exact same method for calculating those in your base period as well as the later date whenever you compare it. So you can't kind of pick and choose whichever one works out the best. It's mostly just for convenience. I think because the SBA acknowledges that not everybody keeps super accurate payroll records for long periods of time. So you might not know exactly how many hours everybody worked during those. So you can just kind of count every part-time employee as 0.5. But either way, you don't have to have the exact same number of full-time and part-time employees. You can just basically jumble them all together to get whatever those average, I think they call like average paid hours are, and then compare that to your date when you apply for forgiveness, and it has to be at least the same or more. And if you cut anybody's hours, just restore them before you apply or before 12/31, and it'll be considered the same.
Right, and to be clear, that's for full forgiveness. You can always,
correct.
If you don't reach those levels, it will just be reduced proportionally.
Right, and also though there are safe harbors. Adam mentioned a couple of them early in the presentation. So one, if you make an offer to rehire an employee, so if you had to either reduce hours or lay off an employee for whatever reason early in the pandemic and offered then to rehire them once you got your PPP loan and they declined for whatever reason, as long as you made an offer in good faith and then documented that rejection, you can use that to show that you made that effort, so you won't be penalized for that given employee, whether it was full-time or part-time, however that was characterized at the time. Also, if there's if you have any employees who during your covered period or that alternative payroll covered period that they also allow you to use, if they were fired for cause or voluntarily resigned or voluntarily requested and received a reduction in their hours, you won't be penalized for those either. And then I think the other is if you were unable to operate during the period between February 15th and the end of your covered period at the same level that you operated before February 15th, again, you won't be penalized for failing to bring people back if you don't have anything for them to do. So obviously an important part of any of those is documenting it and being able to show that you qualify for that or you satisfy that safe harbor, the requirements of that. So it's important to keep accurate records and make sure to be documenting everything. But there certainly are some safe harbors and some exceptions to those because a lot of companies are having a hard time trying to figure out how to bring people back or whether to bring people back and figuring out whether they have to bring the exact same people back or right. I think like you asked, the exact same kind of FTE equivalent for each position. And as far as I know, you don't even have to bring people back in the same positions. If you're a restaurant, for example, and you aren't operating dining in the restaurant, but you want to hire a bunch of bike delivery people, I think you can do that as long as, again, you're meeting that same kind of FTE requirement.
Great, thank you. Another question about forgivable expenses. Due to COVID, we ended up moving from our office, and this made us have to change our phone service provider after February 15th. does it mean we cannot use this expense as a forgivable expense?
That's a good question. I want to say that you should be able to still use that, because it doesn't really make sense that you couldn't, because it's because of the reason you had to move. But as far as I understand, if it was a utility, a contract or a service contract that was entered into after February 15th, it's not one of the utility expenses that you can that qualifies for forgiveness. And as far as I'm aware, I haven't at least seen any kind of exceptions for a cause, whether it was involuntary, I guess, so to speak, or even it was voluntary but pandemic related, that you had to change services, or even whether you moved or just downgraded service or something. As far as I know, it has to be an obligation that was in place prior to February 15th. At the same time, if I would certainly encourage you to talk to your lender and see and even kind of dig around and see if you can find anything that would kind of justify it. Hopefully, though, at least I hope anyway. I guess I don't know what your utility bills are, but hopefully that'll be kind of a relatively low portion or a small percentage of your overall expenses that you're seeking forgiveness for. So you can, if there is in the end a small amount that's unforgiven, like Craig said, I mean, it's if it has to be repaid, at least the repayment period is whether 2 or 5 years, and it's at 1%. So it's certainly worth it if you can use the remaining funds for forgivable purposes, even if that one item isn't forgivable, or just reallocate those expenses to something else, as long as it still falls within that 60-40 split. At least 60% of it is spent on payroll. You don't have to spend any on rent or utilities or any given category. Those are just the ones that you can. So if you have, if you can reallocate those to payroll or to something else, and just kind of avoid that issue altogether, that would be ideal.
Great, thank you for that. Two questions we have are fairly similar. Are we able to use the PPP loan to pay our 2019 taxes? My answer to that is no, and Nate is shaking his head.
Nope.
So that is
Definitely
not considered a forgivable expense. So avoid that unless you want to take out a low interest loan to pay your 2019 tax liability.
Yeah, and I think there might even
decision you could make.
Although I would be careful about that. There might even be some language in there that specifically cuts out certain things, and I don't know if taxes are. I might be thinking of the EIDL or one of the other loans.
Right.
But yeah, I mean, you can't use it for. It's very limited to those specific categories. And while you, I guess, arguably or theoretically can use it for other things, one, I would probably at a minimum wait until after your covered period is over and after you apply for forgiveness if you're going to use it for other things. Also, it's not entirely clear that you can even use it for other things. The statute says that you have to, not only are these the acceptable uses, but you also have to use it for those things. So it's a little unclear because I don't understand how you could have any amount not forgiven then if you have to use it for those, but best to kind of avoid that if at all possible. I mean, if you end up with a certain amount that you can't use or don't use, I should say, and ends up converting it into a loan, that may be something you could use to pay the tax liability, but I guess I'd encourage you to not do that during your covered period. Wait till after you apply for and get notification about forgiveness. But also, if you have other funds you can use, I would strongly encourage you to do that and just kind of avoid it altogether.
Yeah. And you can also enter into a payment plan with the IRS. So if you're unable to pay taxes tomorrow for 2019, there are some options out there. So, check with your CPA or a tax lawyer about, some of the options that might work for your business. Okay, here's one that might be a gray area, but maybe not. What if the business missed rent payments prior to the date their PPP was dispersed? Provided they're hitting the proper percentage for payroll, rent, utilities, etc., could the business potentially pay both the missed rent because it is paid during the covered period and the current rent, which would be incurred and paid during the covered period? Does that raise any red flags in terms of forgiveness?
That is a great question, one that I've wondered about myself. It's a little unclear if you can use it to pay expenses that are owed, but not necessarily incurred during that covered period. It's pretty clear. They do make it clear, I think, either in the statute or in some of the guidance, that you can't use it to prepay. So you couldn't pay rent out for the next 6 months or something like that. I don't recall seeing anything explicit or specific saying you can't pay rent that's due that you just haven't paid for whatever reason, whether it's deferred by your landlord or just missed payments, or under one of the moratoriums on evictions that have allowed for rent deferrals. I think they did issue some guidance saying you can, as I said that, I just can't remember, I'm say about back pay for wages and things, which would really be a kind of a corollary. But I think, again, yeah, like you said, as long as you're careful about sticking with the 60-40 split, I think that's one of the main issues to be on top of. And obviously, I mean, I assume if you're asking a question, it might not be a possibility, but if you can avoid it, and just kind of stick to the things that are obviously acceptable, that's the best approach. If not, check with your lender and kind of see, because they're going to be the ones, at least the first step, assuming there's no SBA kind of spot check or review, they're going to be the ones taking a look at it and verifying and validating those expenses. But that's a good question. I know others have had that similar question, and I've looked into it a little bit, and I can't recall finding anything that specifically either allowed it or prohibited it. So, like I said, if you can avoid it, otherwise just be careful and document it. And I guess if you don't have any other expenses, allowable expenses to use it on, you can try to use it on those or try to request for forgiveness for that. And if it's not allowed, worst case scenario, you have to repay that, again, on that 2 or 5 year timeline at 1% interest. So, which isn't the worst thing in the world, but I would try to find other ways to use it, other, obviously acceptable ways to use it if you can.
Yeah. Okay, our next question is about the home office deduction on tax returns. What is the home office or rent reimbursement stance if you have claimed it as an expense in past years? And this person wants to compare a sole proprietor to an S Corp owner. So I can take this one on the tax side. If you are a W-2 employee in 2020 and you are working from home, there's no home office deduction, unfortunately. But if you are an independent contractor, self-employed, if you pay yourself as an owner of a company with distributions, in those situations, you will be able to claim that home office deduction. So just be really clear on, how you get paid if you get a W-2. I think there might be some more detailed rules regarding an S Corp, the owner of an S Corp that gets both W-2 and 1099 income, or not 1099, and owner draw income. But I would be cautious and conservative with respect to taking that deduction if you have a W-2, and maybe to check with a tax professional before making that assumption either way. And then a follow-up question here. Will an accountable plan that specifies a monthly home office amount be sufficient to prove rent payments in the forgiveness application? So this is in the case where your business might be paying rent to you as an individual. That's how I read that question.
So, yeah, so I guess as far as home office deductions, I think it partly depends on what your situation is as a self-employed individual or a business entity. But if you're a self-employed individual, you can use those payments for eligible expenses, whether it's home office or otherwise, as long as they were deductions that you took in 2019. And you might be limited not only to whether or not you took those deductions, but to the amount. I'd want to double check on that or check with your accountant or banker. But otherwise, as long as you, and obviously the better you can validate or support those expenses and those uses. But there's, as you can imagine, a lot of people trying to kind of, squeeze in some home office type expenses or deductions, or I should say expenses under the PPP, the use of those PPP funds that if you weren't using your home office in either 2019 or even before the pandemic or whatever it might be, it's much more difficult to justify the use of those expenses. So I'd be careful about that. But if you've always had a home office and always used it and have been paying, claiming those deductions on your taxes in prior years, or like Kimberly said, if your business is paying you rent, your business is using portion of the house and paying you personally rent for that, then those would be fine expenses. There's no issue with even whether it's a house or a commercial property. If you bought a commercial property and have a business there and pay yourself, essentially pay yourself rent, that's perfectly fine. There's no issue with paying related parties, any of those expenses. It just has to be an obligation that existed, I think, before February 15th, and specifically to the home office type expenses or deductions, has to be one that actually existed before and is not one that just kind of arose due to the pandemic.
Great, thanks. Okay, and then I saved a couple of really good questions for last. So first one here is the use of the EIDL and PPP funds for the same expenses, just limited during the forgiveness period, since the EIDL is a long-term loan.
That is my understanding. Yeah, you just can't use them for the same expenses during the same period. So once your covered period is over, or I suppose once you exhaust your PPP funds, you can use the EIDL funds to pay for some of the expenses within the limitations of the EIDL, which I think is much broader than the PPP. But off the top of my head, I don't know that they overlap exactly. But generally, yeah, you just can't use them for the same expenses at the same time.
Right. Okay, great. And then this last one, I know we've talked about internally. Can you claim unemployment and receive a PPP loan? I'm self-employed and I run my own LLC with no employees, just myself.
Yeah, that's a good one. As Kimberly mentioned, we've been trying to figure that one out too. There is not much stated or said about that. Is from the SBA. I remember seeing one comment in one of the interim final rules that said something to the effect of, if you're a self-employed individual, just note that if you apply for and receive a PPP loan, it may affect your, eligibility for state unemployment benefits, but it didn't say whether it did or not. So, I mean, one issue I think, and probably why they can't say one way or the other, is that state, other than that pandemic unemployment assistance program that the federal government has currently through July 31st, state or unemployment benefits are operated at state level, whereas the PPP is operated at the federal level. So there's kind of a disconnect there, and each state obviously has different requirements and a way that they run their eligibility requirements and things, and how they run their unemployment program. So it's a little unclear. I think if you are receiving unemployment and receive a PPP loan and use obviously a portion of that to pay yourself, if you received it before June 5th, you could elect to do the 8-week period, which I think would be preferable, because I think you have to then consider whatever amount you receive to be your payment, your salary or compensation for that covered period, whether it's 8 weeks or 24 weeks. So I think you'd have to report that, when you claim or submit your claim for unemployment, or report it to the unemployment office as compensation that you're receiving. So my guess is it would reduce or potentially eliminate your eligibility for unemployment benefits. I would think, though, or expect that you could refile for unemployment after those benefits, or after your PPP funds were exhausted, or I should say after that covered period, whether they're exhausted before that or not. But it definitely is unclear. So I think taking taking a look at what you're receiving in unemployment benefits compared to what you would receive through the PPP program, and kind of analyzing it, or which one might be more beneficial or more helpful, and making a determination and going with the one that seems to provide the best outcome. Or if, one issue that we discussed or that kind of arose is if you have, and sorry, I guess I didn't catch exactly what your situation was, but I know there are certain people who maybe are paid as a W-2 employee in one job and maybe they have a side job or a different job, whether it's running their own company or paid as an independent contractor from a different business. And if you are applied for and received unemployment through your W-2 job, but not for your independent contractor or other, self-employed position, theoretically, you should be able to apply for a PPP loan for that compensation alone and not have any conflict. At the same time, I think my understanding of the federal or of the state unemployment system is that any compensation or wages you receive while you're on unemployment, you have to report. So even if it's separate, from a separate business, so to speak, I think it would still qualify as something you'd have to report. I don't know that it would change your eligibility, but you'd likely have to report it. And obviously not knowing before you report that how it's going to affect it can kind of be problematic. So that's not really an answer, I realize, but it's still pretty unclear how that works or what the interplay is. And I would think, though, I'm a little surprised that there isn't more information out there, because I imagine there's people that have either tried it or have done it and had some effect. But as far as I know, I haven't seen anything written about how that works or any issues that people have run into. So
great. Well, thank you, Nate, so much. We are just wrapping up. If there's, unless there's other questions, you can enter them in the comments or chat or Q&A section. But we're just posting a link to the FAQs that a lot of them we talked about today. That's on our website, and that can provide you just with some written materials to kind of as an overview of what we have covered today. And I just want to remind everyone that this webinar is offered to our community as a service. We're not providing legal advice through this webinar, even though we are all lawyers. We also want to remind you that this doesn't create an attorney-client relationship between the attendees of our webinar and any of the attorneys participating. So we hope that you took away something great from the presentation that will help your business and help you achieve maximum PPP forgiveness. If you have any other questions, please reach out to us. We'd be happy to chat with you. And for, I don't know, during this time with the COVID-19 pandemic, we're offering a lower hourly rate for the first hour of any consultation. So if you have just some questions that you want to run by us or talk about some other business issues, that would typically be with Nate or myself, and so it would be $199 for that hour, and we'd be pleased to talk to you about whatever you're going through and try and get you some resources. So thanks so much, and have a great evening. Bye.
thanks, everyone.
Thanks, everybody.